Okay, so let's put some of what you've heard so far about the state of the market into a bit of perspectives, and that's why we talk to investment analysts. These guys who are in investment research take their time to look at the numbers, they check the mood of the market, they talk to company CEOs, the management, board of directors, they take a whole look, and they sit around the table and give you what you call a fair assessment of where the market is coming from, where we are, and where we're going. So let's talk to Eronmosele Aziba, who is one of the investment analysts at Afrinvest. Is live to us from our studios at the Nigerian Stock Exchange. Aziba, it's good to see you this morning. Thanks for coming through on the program. So, right now, yes, thank you. It's good to have you. So let's just go straight to business. Do you think we will have what the so-called January effect after this very brutal ending to 2018 month of November? We have just about 2 more sessions thereabout for the month.
Well, I mean, we expect performance, this generally bearish performance, to largely be sustained till the end of the year, although we do not rule out the possibility of the usual Santa rally that you tend to see in the last 2 weeks of trading in the year due to fund managers rebalancing portfolios and all that tends to sort of drive activity in the market. But by and large, the bearish sentiment in the market throughout this year has been closely tied to the upcoming general elections. So we expect to see that continue to dampen investors' sentiment up until the conclusion of the elections before we start to see any positive, potentially positive trend in the market.
Eronmosele, right now we're nearly 4% since November started in the red. Year to date, we're now heading towards 19%, one of the worst performing markets on the African continent. Yesterday was not a good indicator of where the market is going, was it?
No, it wasn't. I mean, we saw sustained sell-offs across some of the bellwethers in the market. So looking at the top banking stocks, also going down to the oil and gas sector, we also saw a significant dip in price of Seplat yesterday, and all these factors generally contributed to the bearish sentiment that we saw in the market. So November is expected to end the month in the red. I mean, except we're going to have 2 days of massive gains in the market, but we're expecting November to end the month in the red, and even for December, we still expect the market to remain deep down in the red.
Does the market still appreciate any good news anymore? Look at Seplat, for example. This was a company crowned as the pearl of the stock market on Sunday night. And the market refused to move on Seplat on Monday. Then investors came in on Tuesday with a sickle and smashed Seplat very massively. So what's going on? Good news don't sell anymore. It looks like bad news is whatever the market wants now. Doesn't look, maybe with the exception of a Continental Ray insurance share a buyout, whatever it is.
Yes, I mean, like you said, there's generally not been any major positive to the market that could potentially boost sentiment. The one thing that a lot of investors have been focusing on is the general elections, because under normal circumstances, you know, considering the fact that foreign investors are the major players in our market, external factors like oil prices, improving external reserves, FX liquidity, performance of the broader economy tend to sort of drive positive sentiment towards our market. But this year, it's been largely tied to developments in the political space. Now we've seen all the candidates from various political parties come out, so we're getting some sense of clarity. But regardless of that, investors are still waiting to the completion of the elections to see if it's going to be a smooth and peaceful process. Also now looking at the individual who's going to be winning the elections and the potential direction the person could be leading the economy. Because if you look at current pricing in the market, there are those opportunities opportunities there for investors to take advantage of. I mean, markets relative to peers shows significant opportunities for upside. So for any investor who has a medium to longer term look on the market, at least an investment period that is going to span beyond the completion of the elections, this would be a good time for you to come into the market and take position.
Yeah, who is selling at this point? You've talked about the why, but who is selling? The big ticket, deep pocket, foreign investors, PE guys, venture capitalists, whatever, or big deep pocket local investors, institutional investors like insurance, PFAs and the rest of them, or retail investors who are looking at cashing out early, making some purchases, consumer spending or discretionary spending for the end of the year. Where is it tilting right now?
Well, it's largely been a mix across all these classes that you've talked about. We have both foreign and domestic investors selling in the market. But interestingly, a trend that we've also noticed is that there has also been some increased buy activity in some of banking bellwethers. So especially looking at the banking space, for instance, there are investors who are looking at the market and looking at the current pricing. I mean, a lot of the stocks are trading close to their 52-week low. And if you look at performance of these companies relative to their current pricing, you can see that they are sort of underpriced. So a lot of investors are also looking at the current pricing in the market. And for those who have a long-term view on the market, are willing to take up that risk and ride the wave through the uncertainty, you can also see them buying and taking position in the market. And again, this still cuts across both the foreign investors, the institutional investors, retail guys, both domestic and foreign as well. So it's been largely a broad spectrum of investors.
Okay. Did you get a market? Yesterday, Seplat informed the stock exchange of dealing of its shares by PDMR, which was a 1.2 million ordinary shares indirectly held by Dr. Ojiako, the chairman of the company, says he sold those shares and things like that. Is that something in the news? Perhaps that was where the price decline came in yesterday for Seplat.
Well, the price decline that we were seeing yesterday could possibly be tied to that, because I mean we saw some major losses in the stock yesterday, losing almost 10%. I mean, you don't see this happen every day. This isn't a frequent occurrence. So investors could have been reacting to some news flows in the market.
Yeah, okay. So let's move. So what do you think? What's the short-term outlook here for investors? It looks like we're going to hold on to this political circuit till the elections are over in February. We're not sure what will happen between the end of February. Whoever wins the elections, whatever happened there between March, April, and May, then we have the May ending, May 29, handing over. Then we can say we're crossing to a blue ocean, bearing any other thing the 1st of June. So what's the short-term outlook here for the market from your end at Afrinvest?
I mean, for us, our short-term view on the market still remains largely bearish, as we believe the uncertainties around the 2019 general elections will continue to weigh on investor sentiment. And I mean, this isn't surprising. This is similar to the trend that we've seen historically in years and periods leading up to general elections. You tend to see a lot of sell-offs in the market, especially from the foreign players. I mean, the one thing that investors detest is uncertainty. And investing in stocks, which comes with its own risk, you can understand why a lot of investors will want to sort of stay clear of the market for now, whilst they take a backseat and look at developments in the broader economy and how they could guide activities of the market.
But if we spend a few minutes to talk about the fixed income space. Investors seem to be chasing wherever they can get yield around 14%. Well, 12%, 11% looks, well, it looks like we've lost 11%. I'm not too sure. It looks like we're not getting single digits this year as originally planned. So we're down. We're now heading towards 15% because the parameters seems to have changed.
Yes, I mean, we've seen short-term rates start to even trend higher. If you look at results from the recent T-bills auctions that have been had, we've seen how rates have sort of trended higher from that about 13%, closer to the 15% range. And even looking at the weekly OMO auctions that the CBN has also been floating, we've seen that investors' main interest has been on the longer dated instruments. So looking at the 360-day instruments have continued to receive the most buy interest, and rates have remained closer to between 15 to 15.5% region. I mean, in a market where equities are currently down in the red and investors are looking for the best opportunity where they can put their funds and get significant returns, the fixed income market has become more attractive for investors, and we've continued to see them take advantage of that opportunity.
Okay. Thank you, Eronmosele Aziba, one of the investment research team at Afrinvest. Thank you very much for your time today. We appreciate that, coming to us from studios at the Nigerian Stock Exchange. And of course, United Bank for Africa, UBA, listed on the market, has just released a statement this morning saying that Fitch Ratings, one of the top 3 global rating agencies, have upgraded UBA's long-term issuer default rating, what we call the IDR, to B+ with a stable outlook. The agency also upgraded UBA's viability rating for this Pan-African bank to B+ from B. And Fitch says the upgrade comes on the back of consistent improvement in financial performance metrics, funding, liquidity, and capitalization. According to Fitch Ratings, UBA is also Nigeria's most international bank, operating in 20 other sub-Saharan countries. In assessing the UBA Group's funding and liquidity, Fitch reported that UBA's local currency funding profile is a rating strength. The loans to deposit ratio was standing at 58% at the end of the first half 2018, is a low compared with peers of 69%. According to Fitch, the deposit base of UBA is well diversified by single customer and retail deposits, representing approximately 1/3 of customer deposits. One of the key reasons behind this higher rating by Fitch of UBA PLC also had to do with the $500 million senior medium-term bond that UBA had on the international debt market in June 2017, issuing pressure on the company's overall foreign currency liquidity position. That's just coming through this morning. Fitch Ratings have upgraded UBA's long-term issuer default rating, what we call the long IDR, to B+. Let's take a break. We'll be right back in 2 minutes.